Hi guys, it's Doc's Market Minute for Thursday, August 27th, and what I'm looking at here is a stockcharts.com version of the Shanghai Stock Exchange. Now this is already closed from yesterday, or today, I don't know which day it is because it's around the other side of the world. Okay, so this is the closing value, and we can see that we've had this enormous swing down after this kind of rising wedge pattern bear flag had broken to the downside. So because of the fact that China is apparently so intertwined with the state of the U.S. economy, because China's crash led to certainly an acceleration of ours late last week and early this week, let's go take a look at the FXI, which is kind of not going to be as accurate a reading as this chart, the SSEC, but will be a nice proxy for us because this is the iShares China ETF. So let's take a look at that and see where things are going. Okay, so like what we do, we're going to start from the top down on the monthly chart here on the left-hand side, and we're going to move down to the smaller time frames depending on what it is that we're trying to look for. Now, what we can see now is that we have this very strong move down, okay, but in the context of the last few months, all this is just non-linear price action. And so this is actually recharging this to some degree, right? So this is just more of a mean reversion at the monthly chart, and we can see the price is right down back into this balance area again. So not very helpful looking at the monthly chart. It just gives us the overall context of what's going on. So now we get some signals when we get onto the weekly chart. The weekly chart is showing now that we have an extreme exhaustion signal on the move to the downside. Okay, extreme exhaustion. Usually when we have moves that are this linear, okay, they will run out of gas and they'll usually recharge by heading back or sideways. Most downward moves like this will go straight back like a rubber band snapping. And if we look at the daily chart over here, one more, we can see that even the daily chart has exhausted itself down here to utter exhaustion. Okay, so we are starting to see perhaps a snap back here. So let me talk about that. Reversals start from the inside out and then they propagate up. So if we go down one more time frame to the 5X chart, that's 5 times faster than the daily chart, the 78-minute chart, what we can see is that now we have what was a downtrend, right? So lower lows and lower highs. All of a sudden we see a higher low, that's important, and now a higher high from there. So higher low, higher high, we now have a change in polarity back up to an uptrend on the 78-minute chart. Now all this does on the daily chart is manifest itself into a swing higher. So we're seeing a bounce off the bottom, and what we're likely to see is that as the 50-day moving average comes down here and forms confluence of resistance, it's probably going to have some type of reaction around that level. Now I would watch the SSEC chart on stock charts, or if you have the actual feed for it, which I do not, on TradeStation. So we can watch this, but it's going to be more accurate seeing that bounce on the actual SSEC. So I would expect to see some type of reaction at that point coming back down, and we'll see whether or not that turns it into a higher low and then maybe a higher high. So maybe we are going to start to see a reversal happening on the daily chart, but that would have to print first. We'd have to see a higher low followed by a higher high to see that change in polarity, and that would manifest itself in terms of a weekly swing at this point. So again, what we're doing here is putting all the puzzle pieces together. We're looking one step ahead of where things might be, and so we're not surprised by what we see in the market because we've already sort of figured out how all these puzzle pieces work together. So to me, that's the most likely outcome, is that we do see some kind of continued bounce up here to maybe test that confluence of resistance, which on the FXI is about 40, and on the SSEC it looks like it's somewhere around the 3,600 level. So that's very similar in terms of where that 50-day moving average is. So one more thing now. Obviously, we're seeing a real strong day in U.S. markets. Maybe the U.S. markets might lead this back up again, but if the problems have not been solved, that's where the Chinese markets will roll over again and might provide a headwind towards U.S. markets in terms of the recovery. Maybe leading to that scenario number 2, where we chop around in a very large range for a number of months before we get some resolution to this, either to the upside or falling into a bear market to the downside. So watch China in the short term. It's a proxy for what we might be seeing going down the road. That's it for today's Market Minute. Thanks for listening, folks. See you tomorrow.